Good morning, madam. This is Divya, guest faculty of commerce from TTWRDC Devarakonda. Today we have to discuss about the topic valuation of goodwill. What is goodwill? What is the benefits of the goodwill? What is the name? Different names of the goodwill. We have to discuss some few words. Goodwill. Goodwill is an intangible asset that accounting for the exact purchase price of another company and including property or intellectual property, brand recognition, and over the valuable aspects. Okay, goodwill is a intangible asset that is the good name of the company and company brand property intellectual properties and valuable aspects we have goodwill. Okay, next. Friendly or helpful feelings toward other people or countries. Okay, friendly or helpful feeling. Goodwill is a helpful feeling that better much better of good feeling. Okay, goodwill is a reputation. Goodwill is a good name of a company or business. Okay, next, the amount of value that a company good reputation adds to its overall value. Okay, good name and reputation is overall affecting by the company and overall affecting by the business also. Okay, good name is the uh, good thing of our business. Good name will be recognized as a reputation also. Okay, next, a kindly feeling of approval and support. Good name is a approval of accounting system we have using the goodwill. Then the goodwill as recognized as a people and good feeling of a company or peoples and other etc. We have a kindly feeling, approval and supporting of a good name of a goodwill is a one of the important thing of our business and company. We have using the goodwill only. We have recognizing the goodwill of the company and we have to uh, recognize and we have the valuable aspect of a company that is called as goodwill, and that some methods are influencing the evaluating of goodwill. We have using the some methods. What are they means? Average profit method. In this method we have to using the some few years profits we have to using that analyzing the future profit also. And next, second thing, super profit method, that is using the average profit we have to calculating the super profit method also, and capitalization method and annuity method. These are four things are the main important of the valuating methods of goodwill. Okay. And first thing, average profit method. What is average profit method means? Goodwill calculating on the basis of the average profit under a few years. Okay, we have to take in the average profit under the few years profits and multiple by the number of years profit will be available. How much years we have in our business will be started in, for example, 2017 we have to start one business. That's why we have to take in the all years profits. We have to calculating the calculating the profits and how much years we have to take in, that is called of number of years. Okay, then profits and number of years we have to calculating the average profit. Then after formula is called average profit is called total number of years profit by total number of years we have to take it. That is calculated as a average profit method. In this method we have to calculate it goodwill. What is the goodwill? We have to analyzing the average profit. Goodwill equal to total number of year profit in purchase years. How much we have purchased years, how much we have estimated year, future estimated year also we have to calculating the average profit, and also we have some adjustments also we have. So in this year, how much we have to expenses, we have to analyzing that, we have to deduct that adjustments also. We have total number of profit every year, some exist amount will be, we have to expenditure, we have to spend the business. So that's why we have taken the adjustments. That adjustments also we have to taken in this average profit method. One of the important topic in our goodwill valuating method in average method is one of the important. And super profit method, second thing we have to super profit method. In this method, what is that means, if the estimated future profit, okay, average profit we have to calculating the number of years, so how many previous years we have to taken that profit, we have to calculating. And super profit is in this previous year we have some in this previous year we have taken some profit, after that we have to estimate the future profits, that is called as super profit method. Okay, in this average method we have to using the super profit method, that will be analyzing the future profit also. Okay, if the estimated future profits are more than the normal profit, okay, more than the present profit we have to estimate it, and future profit also estimated in super profit method. Next, the difference is known as also super profit method. In this method we have to calculating the future profits. The formula super profit equal average profit, average adjustment profit also we have to take it. Super profit method equal to normal profit, how much in this year profit we have to estimate it, that is called as normal profit. That is normal profit is equal to capital employed into normal rate of return. How much rate in this year, that is called as normal rate of return by 100. Okay, normal profit in this year, how much rate we have to purchase, how much rate we have to capital how much rate we have to taken in this year in that product, that is called as normal rate of return. And capital employed, that employed how much salaries we have to given, how much spends amount in our employed, that is called as capital employed. And in this normal profit we have to calculate the capital employed and normal rate of return, that is called as normal profit. In the super profit we have to take in the average profit minus normal profit, that is called as super profit method. Super profit method is estimate the future profit also. And third thing, capitalization method. What is capitalization method? In the investors is closely and kindly linked with the capital employed in business. The investors in closely linked with the capital employed in business. Who is the investors? Okay, in our business, who is the investors? Likely closed are invited, good name of the company, reputation of the company, we have to decide the capitalization method. Okay, in this method how many investors are inviting our company, who is the investor or interesting persons invited our company, that is called as investors. And capital employed, how much capital we have to taken given, that is called as capitalization method. In this method we have to calculate it. And capitalization method equal to FMR by NRR into 100. FMR equal future maintenance profit. What is that FMR? FMR means future maintenance profit. NRR is equal normal rate of return. Okay, we have to calculate the that year how much rate of we have to take, and that will be calculated. And future maintenance profit, future and maintenance profit means that is in our profit we have to some of the amount we have to take in, that is future benefits we have to using that amount. Okay, that is called a future maintenance profit. We have to take in every business organization, we have to maintain the some bulk of amount that is using for the next year beneficiary purpose, we have to using the future maintenance profit. And fourth one, last one, this is the valuating of method. We have fourth one, annuity method. Annuity method means, in annuity means final yearly. Okay, yearly how much we have to implement and some different methods and different aspect, how much we have to spend. Okay, what is the assets, what is the specific number of different things we have to implement it in this year. We have to calculating the estimated future values, we have to calculating the annuity profit method also. In this method, the annuity method in the valuation of goodwill, annuity method in the valuation of goodwill uses the average super profit. Okay, the average super profit method. In these two methods, last previous two methods, we have to using the annuity method or of the specific number of years. How much years we have to taken, the specific number of years we have to taken that year. Annuity method, we have to calculating that year's profits and the current value of the annuity. In the previous years profits, we have to specific number of years, how much years we have to taken, that is a clear. And in that year's profit, the present year, current year of the annuity profit we have to find out. Okay, present year profit we have to find out the annuity method. The basis of the discount amount, how much we have to discount in every year. In this year, how much we have to discounted amount of super profit at the established rate of interest. And the super profit method, we have to calculating the future profits. That's why how much we have to spend, the rate of interest, that is called annuity method. Annuity method is present and future also we have to calculating. Okay, in the super profit we have to analyzing the further future estimated profit. And annuity method also we have to calculate the current value, that is called super profit also. Current and super, and that is present value, present rate of return, how much we have to establish, and future, that is interlink. Okay, we have interlink. So annuity method is also very important. The profits may be increase or decrease, that is analyzing the annuity method decision. Okay, we have to analyzing the profits in specific year, every year how much we have to earn or how much we have to losses. Okay, that is called annuity method. We have to calculating that important role and important thing we have calculating in annuity method. In annuity method, formula equal to super profit in annuity profit. In this year, how much we have to calculating, how much we have to estimated profit, that is called as annuity profit. And super profit is future estimated profit. Okay, and annuity profit, we have to calculating the two types of profit. First one, less than one, next one, greater than one. What is the less than, what is the greater than, means present year situation. In this year, annuity profit is less than one and annuity profit is greater than one. That is called calculated the annuity profit method. Okay, these are the methods of the valuating of goodwill. Four methods. Average profit, we have to calculating the previous year profits, and in the super profit method we have to calculating the future profits, how much we have to estimated, that is called as super profit method. And capitalization method. In this capitalization method, we have to how much investors are in their our company. Okay, closely related our company, we have to business analyzing the capitalization of method. And in annuity method, we have to estimated the current value of the annuity and estimated the future value of the annuity. That is a clear. We have to valuating of the goodwill. We have to four methods. Very important thing. First one, average profit, and second one, super profit, and third one, capitalization method and annuity method. Very clearly we have to explain. And valuation of share. Okay, valuation of shares, we have the fair market value. Okay, the market value of assets and liabilities of a company. Okay, assets and liabilities from the purchase price. Okay, every year the valuation of shares very differently we have taken. And the fair market value also every year same. It is not clear. Every year we have to change the fair market value also. Some are the influencing the some methods are in there. Methods of valuation of shares, some using the some methods. The valuation of shares we have to calculating the some using the methods. What are they means? First one, net asset method, second one, yield method, and third one, fair value method. Okay, net asset method. What is net asset method? Means value shares based on the companies value of shares. How much shares we have, that is based on the our company, that is called as our net asset of the company. Okay, next, a valuation approach, the focus on the asset and liability of a business, often using for companies with significance of tangible asset. Okay, valuation of approach that focus basis on the assets and liabilities of a business and company tangible asset. What is a tangible asset? We have to touch and feel it. That is called as tangible asset. For example, building like machinery, land and building, that is called as all those things are etc. Tangible assets. And net assets value are the total value of a company assets. Number of liabilities representing the equity valuable of shareholders. How many shareholders we have to calculating the valuable and liabilities also we have to take in the very important, the total value of the company assets, how much we have profits, how much we have asset. Okay, for example, we have some bulk of the amount we have to take it, and some of the shareholders we have to command investing some of the amount, and how many members we have there. Okay, we have to calculating the that one very important. And how many liabilities are in our company, that is also reducing the one we have to take in the liabilities also. Representation will be very important. And in this method, this is also known as balance sheet also. We have taken the assets and deduct the liabilities, that is called as balance sheet. And breakup value method and valuation of equity basis asset backing method. Okay, valuation of equity. Okay, now every year how much we have to spend the shareholders in our company, that is the most important thing. Our net asset method, we have to calculating the Dutch point. That point we have to calculating in our net asset method. Next, he emphasis on the safety of investment, as in the investors away need safety for the investment. How many investors are in our inviting in our company, that is called as investment of our company, goodwill, good name. And under this method we have to calculating the how much expenses we have and liabilities we have. Next, how much values are in our company, how much assets are in our company, equity available in our shareholders, how many members are in there. This is also called as net asset method. We have to calculate it in our goodwill sharing. And under this method, divided in the number of shares arrive the net asset value each share. Okay, net asset method, we have calculating the net asset value of each share. How much shares we have, some each share how much we have to spend. That is called as a net asset method. The equation is called total value of equity shares equal to net assets minus preference shares capital. Valuation of one equity share is equal to net asset minus preference share capital by number of equity share. How many members are in there? That is called as number of equity shares. Preference share capital, equity shareholders, how much we have to invest it. That is called as preference shares capital. How many assets are there? That is called as net asset. We have to deduct the liabilities also. Okay. Valuation of net asset method, we have to calculating the valuation of equity shareholders. How many shareholders and value of one shareholders value we have to calculating in net asset method. And second thing, yield method. In this yield method, we have considered dividend paid by the company. How much we have to paid in another companies, we have to called as dividend paid. How much amount we have to paid in our company. Okay, we have to calculating. And bonus shares, right issues. And if the returns is more, the price helpful share is also more. Okay, under this method, the valuating of shares is obtained by the comparing of expected rate of return. Okay, we have to expect the rate of return in the normal rate of return. Okay, how much we have to spend in our company in other purpose, we have to using that, we have to share the price. And also more valuable things, we have valuable amount we have to share. That is called as a yield method. We have to calculating that points also. And yield value method, we have to yield value of share method equal to expected rate. What is the expected rate by normal rate? Okay, what is the expected rate and what is the normal rate into paid up value of share. How much we have to paid in this last clip slide. We have to discuss the net asset method. We have to using the value of one equity share, that is called as net asset method. Okay, in this yield method, we have to using the that paid up value of share. How much we have to spend value of share, that is called a paid up value of share. And what is the normal rate of return in this year, how much we have to take in the rate of return. And expected in this year, how much rate we have to expected in our business purchase price rate. Okay, we have to calculating the yield value method. Okay, then expected rate equal to available profit, how much profits we have to there. And next, total of paid of equity of share capitals. Okay, we have to how much paid. Okay, net asset method, we have to calculating the paid up value share of method. What is the total paid up capital and into 100. Okay, we have to expected rate, we have to available profit, and how much we have to spend. Okay, that is called as expected rate. And normal rate means in this year how much rate we have to purchase and selling of a product. That is called as normal rate. How much value of share we have to spend. Okay, yield method, we have to calculating the expected rate, normal rate, and paid up value of shares. And third thing, fair value method. What is a fair value method? Analysts arrive upon the valuation based on the factors like supply demand. What is the supply, what is the demand? The market value is depend upon the supply and demand for the asset. Okay, now what is the valuable asset? That is called as fair market value. Okay, in that asset we have to calculating the demand and supply, also utility, expected growth of the product, and competition of the levels of the product, and associated risk, how much risk we have to take in that products buying or selling. Okay, fair market value is a very important thing. Our valuating of business, valuating of value, valuating of shareholders, Very, 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 very important. How many members are in there? We have to everyone know the asset utility and expected growth and competition level association of risk. We have to, all those things are affecting by the our profit. Okay, these fair market value equal very important about in our valuating of business. Fair value is often used in accounting for the measuring and reporting of the financial institutions. Okay, instruments. This is measured reporting of the financial position of the company. We have to take in the fair market value, profit or loss. This will be recognized in fair market value. Fair value method we have to. How much stock, such as stocks, bonds, derivative products, more aspects, representation, asset of the value on the company, balance sheet, historical cost, present cost, book value cost. This also find out the in fair value method. Very risk associated risk and growth rate, expected growth rate we have to analyzing in fair value method. Okay, this is the very important topic in our goodwill. And fair value method is depend upon the net asset value plus yield method by 2. Okay, this is very important in our valuation of shares method. We have three methods, very important: net asset method, yield method, and fair value method. Net asset method we have to calculating the each share, how much shares we have, then each share how much we have to spend, that is called as net asset method. In yield method we have to using the expected rate. Okay, present rate we have to taken, and future rate we have to how much we have to spend and how much we have to allocated, that is in yield method we have to using. In fair value method we have to analyzing the fair value method, we have to analyzing the share value method and yield value method. Those things are very useful, closely we have to using the in fair value method. Okay, in goodwill we have to using the two methods. First one, methods of valuating goodwill and methods of valuating shareholders. These are the two important things are our valuation of goodwill. Goodwill is a wonderful topic in our commerce. Goodwill is a reputation and good name of our company or business. Very useful our daily life also. Goodwill is a, one of the most important in our life. Why? Because we have reputation. Reputation is also everybody know that, and a good name means this is recognized our family, our location, and goodwill is a very important in our daily life and as well as business purpose. We have to using the goodwill. In goodwill, in accounts purpose, valuating the shareholders and valuating the goodwill, some averages profits we have to calculating purpose we have to using the goodwill. Okay, okay, thank you all of you, thank you so much.